audio microphone shaking head touch. Good afternoon on Maui, good evening on the West Coast, and probably good morning if you're watching this on the East Coast. Thursday stock market session was close to perfect. Now, I'm not going to say it was amazing, but you tell you what, it was good. The Russell 2000 was up over 2%, up 2.01% with volume higher than the day before. Got the volume figures from MarketSmith. Looking really quick at the internals, technically, money stream trending higher, relative strength. Starting to pick up. Today was a very strong day. Excellent. MAC, TSV, you can see they're both moving up with the moving averages moving up, and they are neither one is overbought. So there's plenty of room to go. Because of the move in the Russell 2000, with the IWM confirming it on above average volume, with it also producing a pocket pivot point buy signal, which is what the Russell 2000 would have shown if we had correct volume figures, we will be taking off half of our SRTY position, despite the Russell 2000 still having three. This is the first one here at the end of April. This is the second one, and this is the third one, the March highs. Three significant resistance levels remain, but the move today was very powerful on decent volume, even though it's not above average, with pocket pivot point signals everywhere. So half of that position is going to come off. And then dealing with that, FAZ closing below the 1860 levels at 1818 means that the rest of that position has to be taken completely off. So full sell in FAZ. 50% sell in SRTY. Getting back to the indexes, the NASDAQ also, as you can see, produced a pocket pivot point signal. I know volume was below average, but you got to realize it's summertime. The volume today is significantly larger than anything we've seen basically since we started to find a floor back in May. And even though these are red bars, you can see that there's a big intraday reversal on the 7th and basically little to no price movement anywhere on the 8th, and we continue to find support off that level. So it's a very strong move. Once again, MACD, relative strength, money stream, time segment volume, our internal indicators are all positive, and we're not overbought on any of them yet. Plus, even if we do overbought, we can stay overbought and move higher as we basically retrace and then move to even more overbought levels again. So right now, everything is lined up. And if we look at the QQQ, you can see pocket pivot point buy signal with a little bit of a jump in the volume. It's also confirming with its internals. And the NASDAQ 100, it too is confirming with its internals. Volume surge, pocket pivot point buy signal, full confirmation. Now looking at the other indexes, the NYSE and the S&P 500 did not produce pocket pivot point signals today. Volume was below average, but if you look at the internals, S&P 500, MACD, TSV, bullish. New York Stock Exchange, very bullish. The Dow Jones Industrial Average, pocket pivot point buy signal. MACD, bullish. TSV, bullish. I don't give a shit about the relative strength line with these NYSE indexes. I care about the NASDAQ and Russell 2000. So to see them taking the lead with all these pocket pivot point signals is pretty amazing. And that's also confirmed in the ETFs. The Diamond, pocket pivot point signal. The Spider, despite the S&P 500 not having it, it had a pocket pivot point signal. And once again, the internals look good. So we've got a full-on confirmation here. The only thing is that the Russell 2000 still has significant resistance, so I'm not getting rid of the entire hedge, but the hedge is tiny now. It's probably down to 1.5% of the portfolio. The rest of the portfolio is completely long, which goes to another point. This is why you can't marry a position. In March to April, I thought this market had the look of it for a crash, just like in the summer 2011, but it didn't happen. And instead of saying that, oh, well, then it's going to turn into a bear market, I look at the facts, and yeah, while we had an expensive market and extreme sentiment, we don't have an inverted yield curve and don't have deflation. So until price fully confirms that the market is expensive, you can't do anything. And we never got that. Throughout this entire rally, we got signals in New York Stock Exchange stocks. AWH, FUR, BIP, UDOW, I mean, you name it. I mean, SPXL, AAL, PH, WAG, RAD, IMO, EXL, FDX, PSA off the top of my head. I mean, we just had New York Stock Exchange left and right producing signals. And whenever you have that, it's hard to ignore the strong signals. And they were very strong signals, hence our constant 5% positions. which is why if you weren't fully invested coming in today, today probably freaking hurts. And it should. This should be a reminder why you can never marry your opinions. And I'll say it again. If we continue to rally higher, we get overbought and have a big reversal and heavier volume, I will once again be looking for a crash because our rally is on no volume. This sets us up for ugly, painful reversals, especially on the New York Stock Exchange stocks. As you look at the volume in the Dow Jones Industrial Average New York Stock Exchange, this sets up for ugly reversals. However, besides a quick crash, I ain't going to be looking for that until interest rates start to rise. We got quantitative easing and a negative interest rate policy now out of Europe. What else are you going to do to find yield? You got to go into the stocks that basically own the world. They own America, these big giant corporations like McDonald's, Philip Morris, and shit like that, and you get their dividends. That's where you got to get some beta, because until interest rates in the short term rise, the chances of us having significant long-term downtrend are little. Inverted yield curves happened before the 2000 stock market crash, and before the 2000 stock market crash. It's what you need. We've had the same yield curve for the past 6 years. So until that changes, I'm looking for crashes. If we don't get crashes, we find support and rally. You got a BTFD, buy the fucking dip. So speaking of buy the fucking dip, we have one new long position tonight in ARWR. ARWR was the biggest miss ever in the history of big wave trading due to a low volume pocket pivot point signal out of this base, only risking 2%. We get a volume above average today that day. This isn't a 10% position like the limit order was following the next day signal. It's a 20% signal. So we get a chart like this again in this current environment, it's a 10% signal. We get a chart like this with volume in this environment and we have volume in the indexes, it's a 20% signal. Sadly, we missed it. The next day I got my signal up too much, so I decided to put my limit order right at the open in this date, 435. Got it to pull back on the 17th to 437. What did I miss out on? Only a very easy, simple to hold 500% gain from the very first time that we had a parabolic climatic move, 500%. So, but that's that. And here it is again. This time it's a little different. The move off the lows is very bullish. Multiple pocket pivot point signals, 1, 2, 3, 4. You can see the accumulation is much larger in distribution. Steady increase in BOP, steady increase in TSV, steady increase in MACD, steady increase in BOP, steady increase in relative strength. It's perfect. However, the problem is the base is very symmetrical. Everything looks great about it. However, it's very deep in the current base. So that's problem one. Problem two, it's up almost 10% today, making it risky. Problem number three, before we actually know we're completely wrong on the position, I'm going to have to lose 17% on my final holding. I could be out of 75 to 80% of it, but I'll be holding a little bit until it closes below the 200-day moving average. So it's more like 15% by the time tomorrow comes. The 200-day moving average will tick higher again, and we'll move from there. But everything is in confirmation of this. You can see the long-term chart, extremely bullish off those July, August lows. Yeah, Zoom 3 shows you all you need to see. Zoom 2 doesn't show you anything else. So everything you see here, look at all that accumulation from July to March. The pullback, the two big down days had some intraday support off the lows. Now we're rounding out, moving higher. Good position, but I don't have 5% of capital to put into it. I have about 3% cash in my portfolio, and because it's a 10% one-day gain for ARWR, 2.5% signal, 2.5% signal. If you're underinvested, please go to the new positions page and look at all the highlighted stocks. There were pocket pivot point signals everywhere today. Everywhere today. I'm pretty sure every one I bring up, oh, that one didn't. It's going to have a pocket pivot point signal. Diode even, PNR even. I mean, it was just seemed like they were everywhere today, and breakouts galore like Vince, JLL, pocket pivot point, earnings winners like OVTI. I mean, we've just got some very, very good looking chart patterns here. Also, before I go, one more partial sell, RAD, closing below the 20-day moving average. The big intraday support and tight intraday action off that lows prevents it from being anything bigger. It's going to be in between 20-25% sell, so it's basically a 22.5% sell for me. Thank you.